Uh, we are live. Awesome six-figure house flipper group. I forgot to post the event, so so that happened. I just posted now, though, so everyone should be getting invites, but we are still live here. Today, we're going to be talking about what's going to happen next in the real estate market. Is it going to continue to go up like crazy? Is it going to go down? Is it going to crash? Is it going to go flat? We're going to talk about all these differences here, like what's going to happen with it. You know, what's going to happen. It's important to know where it is going, just so you can know, hey, should I invest? Should I wait? And make sure to stick around. I'll give you the answer, and then you'll know, hey, should I invest in real estate? Maybe I should wait 10 years or wait 5 years. You know, all that stuff. So we'll get into all of that. If you're watching this on the live, comment #live. You know, we always do this on the replay, #replay. It helps build momentum. I know I was late on the posting of the event, so if you guys can help me out and get the word out there, and you can do that by commenting, liking it, that'd be hugely appreciated. Make up for my mishap. So if you could do that, that'd be great. So let's get into it here. Before I do, I want to share a little more of my background. So my name is Victor, out of Gainesville, Florida, which is north central Florida. I am a fix and flipper. Did 20 flips last year, 30 flips this year is the goal. And yeah, just looking to do more flips and fix some flips and do more real estate, and all that's really exciting. So yeah, just like what I do, and then I do this full time in terms of flipping. I also mentor people. We can talk about that another time. But that's me and my background. So with that, as you may notice, I'm not an economist. I'm not a psychic. I'm not whatever. So I can't necessarily 100% predict what's going to happen in the real estate market, down to a T. I can give my theories, I can give my ideas, and kind of share what's going on there. But that's about the extent to which what I can do there. Great. So all of that boring stuff out of the way, let's get into it. So as you guys probably know, the market is pretty hot. It is cooling down from what we're seeing, and we'll talk about all those different metrics. So it is, what happened, especially with Corona, was definitely a curveball. Let's put it that way, because I've been flipping full time since about 2018. So it's 2018, so I was flipping pre-Corona. And I thought when Corona was going to happen, first off, I brushed it off. This was back in early 2020. I was like, oh, this isn't going to be a big deal. It's going to be gone in a couple of weeks, gone in a month. It's kind of overblown. And then it turned out it wouldn't be. It wouldn't be overblown. That we'd be, dealing with this for another year. I guess we're a year and a half into it, to start in about March, February, March. About, it's September now, so it's a year and a half into it. So we're about 18 months into it. So I had properties. I got about 10 to 12 properties during that time when Corona hit. And what happened with those? I mean, they're good properties, but I thought the market was going to crash. Obviously a pandemic, all this stuff is going on. I thought the market was going to go down. So we kind of sold some stuff, and I was happy to sell that stuff. Maybe took a little bit less than I should have, knowing what I know now, but I still made a profit. I still did really well. I was able to exit some of those flips a little bit quicker than I wanted, but that was exciting. So did that, but I thought the market was going to slow down and cool down and crash. Actually didn't. With Corona, it's actually sped up. Inventory is low, which we'll talk about. Interest rates are low, which we'll talk about. And all these things happened, and basically, the market's really hot. The market's really, really hot, where people who want to get started in this, there's still deals out there, don't get me wrong, but it is harder than ever to get a deal. And it's really easy to sell them, but if you're looking at a good property, there's multiple offers on it, lots of showings, all those different factors there. So all those different things. So it is a really hot market, is slowing down. But then the next question is, okay, well, that's where the market is now, and that's kind of a quick summary of the market, where it's just gotten hotter over the last decade. Where is it going to go? The first thing to look at when you want to, what does it mean when a market's hot? So what it means when a market's hot is demand is high and supply is low. That's kind of what we're seeing. So it really comes down to those two factors. I guess I gave myself away there. It's really two things. It's supply and demand. So supply and demand, basic economics. Supply is how much of something there is for sale at any given time. And then demand is like how many people want that thing and are willing to pay for it. So if you can imagine, let's just break it down really quickly. So if you can imagine like supply, let's say there's a small island. Let's say there's a small island and there's 100 people on the island, and let's say bananas, for an example, are really plentiful, and there's thousands, tens of thousands of bananas. And there's not a lot of people there. So as you can imagine, like the supply is really high, so it's not really valuable. If you change the supply, and it's now not tens of thousands of bananas, it's 10 bananas for 100 people. Now the supply is really low, so it's really valuable, and people want that. So that's what happens when like supply goes down. So people would pay more for it. They got to survive, they got to live, they got to eat. So they would pay more for that banana. So that makes sense, right? So that's basics of supply. And then let's say with demand, let's say there's 100 people, 100 bananas. Let's say like previously, like there's a lot of different food sources. They can eat pigs, they can eat, they can eat pizza, they can eat hamburgers, they can eat all they want. So the demand is the same. Let's say for whatever reason, they're really hungry, or they're going to be going on a fishing trip here, so they have to eat a lot here. So they got probably the demand for the bananas goes up. So that's kind of demand. So it's like the desire for it. So that's a part of it too. Or on the flip side, where maybe there's more food introduced to the ecosystem, like maybe now there's coconuts, and now there's what's another fruit? Maybe there's apples on this island. It's one of those apple islands. So now they have different choices. So demand would go down. So that's the quick summary of like supply and demand. So it's pretty like basic economics, but I want to make sure we're on the same page there, because I'm going to go into some detail, housing specific. So I just want to make sure everyone's like, okay, what's supply, what's demand, that sort of thing. So part of economics is like there's scarce resources, so we have to make use of all those scarce resources. So great. So for housing, so that's islands, that's bananas. Okay, cool. Let's talk about like housing and economics and markets and real estate, because that's what we're here for. So let's talk about supply. So how do you measure supply when it comes to real estate? So it's pretty simple, actually. So you can actually find this data online. Supply is what's called inventory. So inventory is like how many houses there are actively for sale at any given time. So that's like how many houses are actively for sale at any given time. And luckily you can look this up. So I'm going to share my screen here. So I'm going to look up, so I live in Florida, obviously. And I'm going to look up Florida. So this is fed.stlouisfed.org/series/Florida. So this is housing inventory active listing count in Florida. This is based on time. So you have since 2016. This is for Florida. I mean, it's pretty similar numbers for the United States, but I just want to use the Florida one because it's a little simpler to look at. And I look at this one pretty often, like monthly or so. So as I was talking about, like, okay, this is active listing count. Let me explain here what we're looking at. So this is like how many houses are for sale at any given point in time. So like how many houses were for sale in Florida in terms of inventory in November 2019. Well, I have the number here. And if you see the screen, it's 139,805. And I can look at this and I can know how many houses were for sale over time. So I can measure supply over time. And then I have like where we're at, which we'll talk about, which is August 2021. It's now September, so it's a little bit different. But like we're looking at supply data. We know and have a good way to measure like supply. So this is active listing count. So how many houses are for sale at any given time in Florida? So again, I've been flipping since 2018. So let's look at pre-corona. Like what were the numbers? Like how many houses were for sale pre-corona? And so February 2020 is basically when it started. So there were 137,000 houses for sale pre-corona. 137,000. So that's an important number. 137,000. So 137,000 houses for all of Florida. Okay, cool. That number doesn't mean much unless you're in love with numbers. It's more interesting. Like, okay, well, what does that mean relatively? Like, where are we at now in terms of supply? Where are we gonna be? And that sort of thing. So. If you look at this, so in April 2020 went to 139,000, then it went down. It went down. In August of 2020 went to 107,000. January of 2021 went to 83,000. It actually bottomed out in May of 2021. It's about 50,000. So it went from 137,000 houses for sale, and now it went down to 50,000. So when you're looking at properties and people are complaining like, oh, there's not a lot of inventory, there's not a lot of houses for sale. Well, they're not wrong. They're not wrong. It went down by more than half. Went down by more than half. So that's why a lot of folks complain like, oh, I can't find deals. Well, I mean, obviously, if this is on market MLS listed houses, yeah, because not a lot of people are selling, not a lot of houses are out there. So that's when it bottomed out. It bottomed out over May, and it's actually went up since then. Went in June is at 51,000. July was 55,000 and some change, and then August is 57,000 and some change. So it's going up slowly, but that gives us a good idea of supply, like how many houses are for sale. That's one part of our equation. So to liken it to the island and the bananas, before there were, let's say, 100 bananas for 100 people, and now there's 50 bananas for 100 people. So that's why people are saying like, oh, there's not a lot of bananas out there. There's a banana shortage. There's a housing shortage. Well, because the amount of houses for sale dropped. There's a number of reasons behind this. A lot of factors, a cause and effect. I really don't want to focus on those because it's a whole other video. But just wanted to explain like the basics of like what we're talking about here is for supply. So okay, so let's forecast this into the future. Just based on what we're looking at, I'm not going to look at any like new cause and effects, or I'm just going to look at this data and assume it continues. So based on this rate, and other economists have backed me up on this, if we recover at this rate, because we did bottom out, now it went from 50,000 to 51,000 to 55,000, now we're at 57,000. So at this rate, where it's going to be about anywhere from 12 to 18 months to get to pre-corona levels of inventory. That's about pre-corona levels of inventory. So if you just continue that up slowly, whoop, 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 it's about 12 to 18 months. So at this pace, that's all things being equal, nothing changes. You can make an argument, oh, maybe something will change. Well, hey, let's not focus on that for this discussion here. So that's the basics of supply. Okay, so let's forecast supply. So supply is going to be pretty damn low for the next 12 months, 18 months. So it's probably still going to be, just looking at supply, still going to be a pretty hot market for a while. So that's just looking at this here. So okay, so just get ready for that. That's the first prediction here. All things being equal. So that's kind of the first thing. So what's going to happen in the real estate market next 12 to 18 months? Supply is still going to be low. So the same issues we're dealing with now, we're dealing with them. Something a lot of other people don't talk about, even pre-corona, like the inventory was pretty low. I still had a lot of realtors complain, and people complain like there's not a lot of houses for sale. This is pre-corona, pre all that stuff. So not a lot of people talk about that though. Okay, so that's supply. Houses for sale, pretty low here. So I'm actually going to drop this link. You can take a look at. You can look at United States. You guys can take a look at. The United States. You guys can take a look at Florida. You can take a look at different states, different cities. This is a great tool that, especially seeing over time, it can kind of see it's kind of flat over time. Great. Okay. Cool. That's supply. Okay. So let's talk about supply. What about demand? Hey, how do we estimate demand? So what is demand is like, again, it's like how much people desire or want something. So what would affect people's, and there's a lot of factors that go into it, but what's probably the main factor? And it's actually interest rates. So when people buy a house, they actually don't buy a house, they buy a mortgage, they buy a mortgage payment. So they don't think like, oh, it's 100,000 or 200,000 or 250,000. They always think to themselves, okay, it's $1,000 a month. I can afford $1,000 a month. That's how typical, most people, majority of people think about a house. They think about it in terms of like a mortgage payment. Typically it's like a 30-year fixed, 30-year, payment they make over time. That's how they typically think about it, where it's just like, it's $1,000 a month. So it's typically interest rates. So we can actually track interest rates. Here, I'm going to drop this link as well. There's people here. Thanks so much. Gabriel liking it. Teresa, Jose, there's more people, but it cuts off the comments at 4 comments. I think I saw Rosanna here. Thanks so much for joining. Okay, so that talk about interest rates. So you can actually look at interest rates. I like to look at this one, 30-year fixed. And it's this free map. You can track it over time. So let's look at 5 years. So 5 years ago, in 2018, it was like 4.83% for the interest rate, and now it's like down, 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 down. And now it's kind of flat. It's kind of flat here. But now you can track it. Now you can track interest rates because that affects like what people can pay for a house. You know, so some people like $1,000 might be too much, or too affordable, but like 1,500 isn't affordable because you got to pay for groceries, they have kids, all that different stuff. Let's play around with some numbers here. Let's say we got a $200,000 house, 30-year loan, right? That's typical. Let's say it's 5% interest. Let's say it's so let's just round up because back in 2018, 4.94. Okay, cool. Let's just round up. So that's $1,000, $1,073. So the same house would be about $1,000 a month back in 2018. But we know that people typically just buy like the mortgage payment, they just buy a monthly payment. So let's look at the interest rate now. And now it's 2.8, 2.85. So I'm sharing my screen here, by the way. Now it's $825 a month. So people can basically save like $200 a month paying for that same house, right? So it's the same amount, like they're still buying the same house, like the same amount of house, or paying the same for the house, but the mortgage payment is much, much lower. So hopefully that helps you guys understand, like, oh, wait a second, now I can afford, $825 a month. So then that's why like prices get up, and that's why like it's based on interest rates. Because then let's look at how much a house, let's say someone from 2018 kind of teleported to nowadays, and they're like, oh my God, I have $1,000 a month I can spend on a house. And now interest rates are much, much lower than I expected. They're 2% lower than I expected. So how much house could they buy for if they had $1,000 a month? So let's say they know like I can spend $1,000 a month on a mortgage. I have it within my budget. I can make that happen. I can qualify for that loan. So how much house could they buy? So back in 2018, they could only buy $200,000 in terms of house. That's the highest price they could pay. So let's look at today's price. So I'm just trying to match it to $1,000 here. So this is a little loan payment calculator. Again, I should probably explain this. This is loan amount, loan years, interest rate. So hopefully that made sense. P&I is like principal and interest. That's typically what you pay in terms of the loan. So, okay, so how much could they pay? So let's say $220,000. Could they pay, $1,000 a month? So not quite yet. So they're at 909. Let's try 240. 992. So almost there. Let's probably try 245. So that's, okay, great. So 242. So let's say someone teleported, or not teleported, time traveled, even more possible. Let's say they time traveled from 2018, and they're like, okay, I can spend $1,000 a month. I can spend $1,000 a month. The wrong speaker on. Okay, hopefully you guys can hear me better now. Time warped forward, and they're like, okay, I can spend $1,000 a month. How much can I pay for a house? How much can I pay for a house? And back in 2018, they're like, I can spend $1,000 a month. The most I can pay based on current interest rates is $1,000 a month. And then now they look at it and they're like, okay, I can still spend $1,000 a month. They can spend $242,000 on a house and still pay the same monthly payment. So if you guys are wondering, like, why is the market inflating so much? Like, well, this is why. Because people are buying a monthly payment, like, hey, I can afford $1,000 a month. Now I can go out and buy a $242,000 house. So that's why you looked at interest rates, because that affects like how much people pay, and that affects that sort of thing. So they can pay, what is that, 20% more for a house now versus then. So that's kind of demand. That's why we look at interest rates for demand. So hopefully that made sense. That's kind of a rant. But then we can forecast, okay, so what does that mean for the future? So all things being equal, if you look at this chart, they've kind of been flat basically since the pandemic, right? So they kind of jumped up a little bit, but they've basically been flat for the last like 2 years. They kind of dipped down, then jumped up, and it's kind of flat. So all things being equal, if it continues at this pace, it's just going to be kind of flat for a while. There's, I don't want to make the argument. You can make the argument, what if something else changes? Let's just keep it as simple as possible. Let's say nothing else changes and everything continues as it is. It's going to be flat. So what does that mean? Because we talked about supply, we've talked about demand. So supply is going to like slowly creep up back to normal. Demand is going to be flat. So what does that mean? So basically, and this is my theory of what's happening. Still getting over that sickness. So the market's going to cool down, basically. Like, it's not going to be a huge crash where suddenly overnight, everyone loses their money like 2008. We have different factors at play. We have different factors at play, but that's basically what I'm thinking is going to happen. So over the next, let's say 12 to 18 months, things are going to slowly get back to normal, but it's going to be like a slow plateau. And it's just going to kind of even out. It's not going to be a crash where boom, nobody's buying anymore and everyone's fucked if you own a house. So that's kind of what I'm predicting. All things being equal, there's more factors going in. I've tried to make it as simple as possible. Hey, just for supply, let's just look at inventory. For demand, let's just look at interest rates. There's more factors to it. Just want to make it as simple as possible. So that's kind of what I'm seeing next 12 to 18 months with this simple model that we've set aside here. Again, I'm not a psychic. I'm not an economist. I just flip houses. This is basically what I do. But just studying this is what I've come up with, and that's where we're at, and that's how I'm looking at things. So that in mind, I'm still buying. I think now is a great time still to get into real estate. I sold a house. I bought a house on Friday, which was last Friday. I sold a house on Tuesday. I put a new condo under contract yesterday. I'm still buying. I'm still selling. The basics of what I'm seeing, like there's still plenty of room to play with. In my deals, like I'm buying at enough margins, even if the market does go down 5, 10, even like 30%, I think is my max. Then like I'm still making money. Or I can always turn it into a rental or an Airbnb. I can do owner finance. I have a lot of different exit strategies. So I'm still buying real estate. That's basically what I'm saying is there's a lot of things at play here, but I'm still buying real estate. I still recommend for people and my students to still buy as well and get into this as well. All you're doing is you're buying low, you're selling high. Like that's pretty much all there is to it. Hopefully this made sense. I dropped that here. Let me drop this. And that we got Becky here. Thank you so much. Thanks for hopping on the live. And yeah, that's pretty much the update there. I was sick last week and I'm still getting over it. So that's a pretty simple model of how it works. That's a pretty simple way to think about it. Trying to share my thoughts there and kind of my 2 cents, like what I'm seeing happening. And what I see is the prediction. So that's the prediction. It's going to be a cool down. It's not going to be a crash. There's different factors at play. 2008, 2009, they had like teaser rates and subprime lending and a lot of different like speculation and predatory lending and that sort of thing. And no income, no document loans. It's a little bit different. Still well underwritten. So like there's different things going on now versus then. Now it's just lower interest rates, low supply with the inventory. So that's kind of where I'm coming from. But just want to share that with you guys. I'm going to wrap it up there. Thank you so much. Thanks for hopping on. Thanks for hopping on, even though I didn't post it. But yeah, final news, final announcement, and then I'll let you guys go here. Enjoy the rest of your night. I am launching the podcast. There's going to be a podcast called Six Figure House Flipper right there. Six Figure House Flipper podcast. Just going to be doing some great content there. More real estate, more flipping, more great stuff for beginners. That's going to be live with the first episode on the 29th, which is about 3 weeks away. About 3 weeks away. So 1, 2, 3 weeks away. But at the end of September here. So make sure to stay tuned on that. Learn from that. I think it's a great way because not everyone can hop on these Facebook Lives all the time, but it's much easier to like download a podcast, listen to that, especially on your way to work or when you're doing chores or doing laundry. Just a great way to listen, learn, improve your real estate skills so you can improve your income and improve your lifestyle. So exciting stuff there, but I'll let you guys run. Thanks so much. Comment below like, hey, was this helpful? This was a little more economics based, a little more research based, a little more cerebral, let's call it. So let me know if this was helpful, if this was interesting. Let me know if it wasn't interesting, or if there's other types videos you want to see. If you say like, hey, I want more deep dives, or hey, I want more explanations how to get deals, or hey, I want to see this, or hey, I want to see that, that's totally fine. I'm here to help, and I want to serve you guys and see you guys to be successful. So we'll wrap it up there though, but appreciate it, and you guys have a good night.